Hello and welcome to this exciting video on trading strategy. In this video we will discuss a powerful strategy that you can use to become a more informed trader and investor in the stock market. We will cover everything from the indicators and settings being used to implementing a solid entry and exit strategy. But before we dive in, I want to encourage you to watch this video until the end. You won't want to miss any of the crucial insights and tips we will be sharing, as this strategy uses free and widely available indicators so you can follow along while you do. And if you find this content valuable, please consider hitting the like button and subscribing to our channel to stay updated on our latest trading strategies. Also, we'd love to hear from you in the comments section. Let us know your thoughts, questions, or even your own experience with the strategy and backtesting. So, without further ado, let's get started taking your trading game to the next level.
Trading successfully using fractals. Fractals are repeating price patterns across time frames that come together to build similar structures on larger time frames. They are a powerful tool that traders can use to identify potential buying and selling opportunities in the stock market. Let's start by discussing some common indicators that can be useful for identifying fractal patterns. Moving averages are an excellent example of how fractals work by repeating patterns of divergence. By studying how these structures interact on smaller scales, traders can gain insight into what the eventual shape of the larger structure will be. Specifically, when the 5-period moving average crosses above the 10-period moving average, we can expect the 10-period moving average to eventually cross above the 100-period moving average, forming a fractal pattern. Fibonacci retracements also work in fractals by identifying time-analogous ratios. By measuring distance based on the previous so many bars, rather than the dollar price on the right of the chart, traders can identify potential support and resistance levels within a fractal pattern. This can help traders identify potential buying and selling levels. Now let's talk about some strategic ways to buy and sell using fractal patterns for profits. Trend trading using fractals involves expecting the pattern to continue. By identifying the trend, traders can enter a buy position when the price breaks above a previous high or a sell position when the price breaks below a previous low. Counter-trend trading a fractal pattern involves predicting when the trend will end inside the pattern. Traders can use Fibonacci retracements and other technical indicators to identify potential support and resistance levels and overbought and oversold levels to enter buy or sell positions accordingly. Range trading a fractal pattern involves counter-trend trading a fractal that's getting smaller and tighter, resulting in an overall range-bound pattern. It's essential to remember that successful trading using fractals requires a combination of technical analysis, risk management, and discipline. By applying principles from physics and mathematics, traders can identify and trade fractal patterns profitably. In conclusion, using fractals for trading can be a useful strategy for identifying potential buying and selling opportunities in the stock market. By understanding how fractals work and using common indicators such as moving averages and Fibonacci retracements, traders can develop effective trading strategies such as trend, counter-trend, and range-bound fractal strategies. With proper risk management and discipline, traders can use fractals to trade profitably in the stock market. Let's create an example fractal trading strategy based on the ideas and indicators mentioned above. Our strategy will be a trend-following strategy that uses the moving averages to identify fractal patterns. Specifically, we will use the 5-period moving average, MA, and the 10-period MA to identify potential buy and sell signals. First, we will look for an upward fractal pattern, which is when the 5-period MA crosses above the 10-period MA. When this happens, we will enter a long position, as we expect the 10-period MA to eventually cross above the 100-period MA, forming a larger fractal pattern. Next, we will look for a downward fractal pattern, which is when the 5-period MA crosses below the 10-period MA. When this happens, we will exit our long position and enter a short position, as we expect the 10-period MA to eventually cross below the 100-period MA, forming a larger fractal pattern. We will use a stop-loss order to limit our risk on each trade. Specifically, we will set our stop-loss order at the low of the previous bar for long positions and at the high of the previous bar for short positions. Now, let's speculate on why this strategy might be effective given current economic understandings of capital markets. The fractal pattern is a recurring pattern that occurs in many different systems, including the stock market. By identifying these patterns and using them to trade, we can take advantage of the natural rhythm of the market. Additionally, using moving averages as our indicator allows us to smooth out the noise in the market and identify potential trends. Finally, using a stop-loss order helps us limit our risk and protect our capital in case the market moves against us. Overall, this strategy combines the power of fractal patterns with technical analysis and risk management to create a potentially effective trading strategy in the stock market.
To wrap things up, we hope you found the information helpful and insightful. If you have any questions or feedback, please leave them in the comments section below. And if you enjoyed this video and want to see more like it, please consider liking and subscribing to the channel. By doing so, you'll stay updated on our latest trading strategies and tips, helping you become a more successful trader and investor. Remember, trading is a constant learning process, and we're here to help you every step of the way. So thanks again, and we'll see you in the next video.